Hi guys, Henry here from Investment for Expats. Thought I'd give you my take on what's happening on the banks as of the 21st of March. As I've always, don't take my word for it, just giving a bit of analysis. I'll put links to people that are way more have expertise on this subject. I think Mohammed El-Ran has done some good articles on Bloomberg and some good commentary on that, so I'll try to put some links to that so you can do a bit of your own research and kind of have a deeper look on people that have much more influence and knowledge on this than me. But just wanted to touch on it from a portfolio perspective and give you a bit of idea of what's happening to help you make some informed decisions and what may be some aspects to look at. Firstly, what do I think about it? And for a portfolio, I think if you're long-term investors seem to get caught up in the moment. If you've got a 5, 10, 15, 20 year investment time frame, it should be okay. I've linked a lot in my articles to Ben Bernanke's Noble Running literature about the bank runs, etc. The governments will be very unlikely to let a bank run happen. You've seen what's happened in Credit Suisse with its saving the bank, either by UBS taking it over and a bit of government intervention. Now the US is really assuring on the smaller regional banks, where I actually think there may be a bit more of a problem on these aspects as depositors go for more of the larger systemic banks. So that could be a kind of minor problem, is that, well, not minor, sorry, bit of a problem there with the regional banks on a bank run. But again, the US is doing all it can to ensure depositors that its money is safe. So going on to the opposite end of the spectrum into where to invest and look for a portfolio. As I said, if you've got a diversified portfolio, it's actually better just to stay safe, diversify. Again, look at just potentially different asset classes, bonds of investment grade if you're looking for more stability. Gold also does well in times of economic downturn. In terms on the equity markets, this may sound a bit irrational, but I actually think there's some good bank shares out there. For example, OCB Bank in Singapore, they have some good dividends, good health, pretty stable. And again, if you're looking at a developed market economy, because of the bank runs, I very much doubt it's going to collapse. Obviously, I could be completely wrong, and I'll pull my hands up if I am on that, as I've been many times before. But again, I think if you can get a 5% dividend, it's trading 40% below what analysts say, and it's kind of beaten up by the market, and you've got a 5-10 year time frame, it may not be a bad option on that. So see it more as an opportunity than a threat. Think 5 to 10 years, keep your portfolios diversified, and also think about different asset classes in the short to medium term if you did want to take kind of opportunity out of this situation. My final thoughts are, I don't think it'll be systemic again, but I could be completely wrong. I think the governments will do whatever interventions to stop the bank run. But as a caveat to that, what will happen is the Fed might not hike interest rates. That will kind of combat inflation, to have higher inflation that will lead to less consumer discretionary spending, that again might have adverse effects from a macroeconomic perspective. Hope you find this useful. If you have, feel free to have a look at more blogs that we've done at investmentforexpats.com. Thanks guys.